For months now, gold is on the front pages. Headlines are following its rising for one reason: gold price has increased twofold in the last 4 years. What should we expect now? What's the best way to invest in gold? John Hatherway, Senior Managing Director at Tocqueville Asset Management, is with us today. John Hatherway, hello.
Thank you.
In the past year, you've been anticipating this growth. Do you think gold price is still reflecting the fundamental of this asset?
I do. There's a lot of concern around the world about the value of paper currency and unwise policies by the Federal Reserve and other central banks. And that's the main thing on investors' mind.
Is inflation still one of the main reasons to invest in gold?
It certainly is one. The policies that the central banks are pursuing, which is basically flooding the world with liquidity, the banking system with liquidity, traditionally that's always led to inflation. And it most likely will again.
As you said, is there any concern about the dollar now?
Tremendous concern. Not so much in the U.S., where I think most investors are, I would say, oblivious to what's going on in terms of the foreign exchange markets. But clearly there's a huge amount of unhappiness with our trading partners, Europeans, in China, about the future value of the dollar. I think this could all come to a head at the G20 meeting that's coming up in Seoul, Korea.
As a specialist of gold, have you identified like a maximum price for gold?
It's really hard to know that. It's a function of how much more damage the monetary authorities will do in what can only be described as a desperate attempt to shore up the financial system.
Should investors hold physically gold or just stocks?
It depends on the investor. If the investor is conservative, risk averse, and simply wants to protect capital, I would recommend owning the ETF GLD traded all over, or physical bullion. On the other hand, if an investor looks at the macroeconomic climate today and sees opportunity and wants to take the risk, then I suggest mining shares.
If gold stocks are at peak, how steeply could they potentially sell off, and how long do you think a gold bear market lasts?
Well, if gold is at a peak and we go into a bear market, gold stocks will go down a lot more than the gold price because they're leveraged, they're inherently leveraged to the gold price. So if gold price is going to go down 20%, then gold stocks could go down 40%. I don't think that's a risk near term, but it's certainly something to worry about.
Let's talk about companies now for a minute. Do you think gold mining companies are investing enough to secure their incomes in the future?
Yeah, I think they're investing barely enough. Gold is very hard to find. Environmental concerns make it much more difficult to bring a new mine into production. And that extends the amount of time it takes to build a new mine. So they're really on a treadmill. It's very hard for them to sustain production. They're just barely doing it.
Would it be a problem eventually?
It will be a problem in the sense that global production will decline. It's harder and harder to find new mines, and it takes longer, and they're more expensive to build.
Please a few words about the Tocqueville Gold, the European version of your product.
Sure. You know, we're very happy to have our relationship with Tocqueville Finance. We launched a gold fund with them 2 years ago, which is basically identical to the funds we manage in the U.S. We've had a good deal of success with it, and it's now approximately 70 million euros, and I expect a lot of growth in the years ahead.
John Hatherway, thank you very much. You're a Senior Managing Director at Tocqueville Asset Management. Thank you.